For the last 3 decades, Knowledge Center at Bursa has offered technology, resources, services, space, and a sense of community. Since 1985, 14,000 titles have been collected, with care and attention to high financial literacy standards. In collaboration with a global community of institutions, we ensure access to the world's diverse intellectual and cultural economic heritage, as well as fast online services for connectivity to the financial world. Serving the Bursa Malaysia community and beyond, Knowledge Center at Bursa empowers you in your trading and investment analysis research.
Financial information at my fingertips.
Visit Knowledge Center at Bursa Malaysia today for the collections, for the services, for the sense of community.
You have suffered financial loss while investing, and you think your bank, broker, fund management company, unit trust management company, PRS provider or distributor, or their agent or representative is responsible. You need help sorting out the problem or want to seek redress. Where do you go? Sidrek is here to help you start the conversation and reach some resolution. First, lodge a formal complaint with a company that sold or offered you the unit trusts, shares, derivatives, or other capital market product or service. But you're not happy with their response. You have 180 days from their final written reply to come to Sidrek. Or if there's no written response, and it's been 90 days since you wrote to them, you don't need to wait longer. You may come to Sidrek even though you haven't received a final response yet. Sidrek first checks the eligibility of your claim. For example, is it within Sidrek's claim limit? Is it against a member of Sidrek? And so forth. If your case is eligible, we begin the dispute resolution process. All information in this process is confidential. We get both you and the member you're complaining against to sit with us and have a conversation. Documents and information will be required from both parties. No lawyers are allowed in the mediation process, as we keep the discussions informal and private. Our mediators are impartial and will hear both sides out and help parties communicate constructively towards resolving the dispute. 2 outcomes are possible at this stage. Either both you and the member agree to a settlement, or you don't. If the both of you agree to a settlement, an agreement is signed and the mediation process ends successfully. But if both you and the member fail to reach a satisfactory resolution, mediation has thus failed. But don't worry, Sidrek then proceeds to the next stage, adjudication. During adjudication, parties are given the chance to provide any further information to help their case and ask each other further questions. Our adjudicator will then study and consider all facts and information provided, including the conduct of the parties, laws, and best industry practices, as well as what's fair and reasonable. Sidrek's adjudicator will then make a final decision on the dispute and the monetary claim. If the decision is in your favor, it could be a full award or a partial award for your claim. But if the decision isn't in your favor, then no award will be made. You, the investor, will still have a choice. If you reject the decision, Sidrek will simply close the case and you may seek other legal avenues for redress. If you choose to accept the decision, however, the member has to comply with it. Once the parties have confirmed compliance to the decision, Sidrek will close the case. So let Sidrek help start the conversation towards resolution. For more information, visit sidrek.com.my or call 03 2282 2280.
Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia and managed by LifeChamp. Today's our webinar title is Trading Using Chart Patterns. So what's up, everyone? So this is Shane Chu. I'm the moderator for this session. Now, chart patterns is fairly reliable indicators that can tell us whether the trend is likely to continue or the trend is likely to reverse. There are many very popular chart patterns such as head and shoulders, double top, double bottoms, and so on. So today we are going to look into all these indicators to learn about these continuation and also reversal chart patterns. So if we learn how to use it, how to spot them, how to apply them, then we will know, we will be able to forecast the trend easier going forward. So today we are going to delve deeper into chart patterns. All right. So disclaimer: whatever we share in this webinar is only for educational purpose. So in no way that I give you any recommendation for you to buy and sell any listed security should we mention here. So if you decide to make any investment decisions, you're responsible for all your investment risks. All right. So allow me to introduce our speaker today, and he's none other than Mr. Hazi Zainal Arifin. All right, so we are very glad to have him here. Now, Mr. Hazi Zainal Arifin is a certified technical analyst, certified financial technician. He is also a full member of the International Federation of Technical Analysts, IFTA, IFTA, full member of the United Kingdom Society of Technical Analysts, UKSTA, full member of the Malaysian Association of Technical Analysts, MATA. So he is also a senior vice president of Inter-Pacific Securities. Aside from that, he also served as a pengerusi Koperasi Remaja Bumiputera Berhad, mantan timbang Presiden Persatuan Remaja Bumiputera, and he's also a former principal consultant for the MSTA program. So he specialized in teaching people how to become a CFTE and also MSTA. All right, so definitely got a lot of credential up his sleeve. So without further ado, let us welcome Mr. Hazi Zainal come to our webinar. So how are you, Tuan?
Alhamdulillah. Yes. How are you, Shane? Yes, I'm very good.
Yeah, I am equally good as well. So can't wait to learn from you about chart patterns. So let me hand over the session to you.
Yes. Okay. Thank you, Shane. Thank you. Yes. Okay, Bismillahirrahmanirrahim. Alhamdulillahirabbil alamin wassalatu wassalamu ala asyrafil anbiya'i wal mursalin wa ala alihi washabbihi ajma'in. Rabbi shrah li sadri wa yassir li amri wa hlul 'uqdatam min lisani yafqahu qawli, amma ba'd. Assalamualaikum warahmatullahi wabarakatuh. Very good evening to all of you, and also Shane, thank you very much. Congratulations to all of you who are here in this session, whereby even though the market is not very good, market today below 1,500. But I can see there is still a lot of you are here. Congratulations, and thank you to Shane from LifeChamp that to have to call me to share my knowledge. Thank you to Bursa Malaysia. They initiate this program. All of these investors education, so that we can share the free education to all the investor. Even though it's free, but it is very valuable. Today, I'm going to share with all you, all my friend here, is about the chart pattern. So this chart pattern, usually I teach this chart pattern with my student in the MSTA program. So a lot of this today's material is from the MSTA syllabus. So at least you do take MSTA also, you can learn about the syllabus. But it is quite long. I try to make it as fast as possible, and I try to make it as simple as possible, so that you can understand. Because the chart pattern is very subjective. One of the branch that's difficult or a bit difficult branch of the technical analysis, which is chart pattern. Why? Because it is you need to train. You need to train your eyes. You need to practice. And if let's say now there are two technical analysts, both might not see the same pattern. So you need to practice. So the keyword here is that you need to practice. So that I designed for today, what I'm going to share with you is that all the criteria of all the chart patterns. So when you, let's say now later, perhaps you want to do the revision. When you do revise, that you remember what is the criteria, that is easier for you to remember, and so that you can identify what is the pattern that's all about. But the most important is not the pattern. The most important is that once you see the pattern, what happened after that pattern. Okay, so I just give you a early hint. Early hint is that all of this pattern, basically what you're looking at is the support and resistance. I think about a couple of weeks ago, I have in this session also, one of these sessions, that I did mention about the support and resistance. This is very important in the technical analysis. Okay, let's begin. Let me share the screen first. Okay. Okay. All right. Okay. Okay. Can you see my screen, Shane?
Yes, we can see it.
All right. Okay. Thank you. So if Shane can see my screen, so I believe, or you can also share the screen. All right. Now. Okay. So trading using chart pattern, continuation pattern, and reversal pattern. Okay. So there basically are two things: market only continuation or reversal. Okay. So what is chart pattern? Okay. The chart pattern is a pattern that is formed within a chart when price are graphed. So which means that it's happened when we plot the chart, then what happened inside the chart. So the chart pattern are used is either reversal or continuation signal. So what we are looking for? We are looking for continuation or reversal. A reversal pattern signal that a prior trend will reverse upon completion of the pattern, while a continuation pattern signal that trend will continue once the pattern is complete. Okay, this is very important. Even though it's very common, but this is very important that a lot of people tend to forget. When you talk about reversal, there must be a trend before that. Okay? When you talk about continuation, there must be a trend before that. So there's always a lot of clients ask, or some of our friends ask, Zainal, is there any pattern here or not? When the market sideways, there's no pattern in the sideways. In the sideways, there's only the channel. So market participant emotion were manifested in the chart pattern. So the question is that why this chart pattern happened, or why it formed like that? The main reason because of there is a market participant, or there is a behavior of the market participant, or who play the market. So chart pattern are used is either reversal or continuous signal. A reversal pattern signal that prior trend will reverse upon completion of the pattern, while continuation pattern signal that the trend will continue once the pattern is complete. Okay. There are two types of pattern, reversal and continuation. Okay, this is the same thing. I said, and then this is a reversal pattern indicate an important reversal in trend is taking place and takes much longer to build. Usually the reversal is take a longer time to build compared to continuation pattern. Okay. So the continuation pattern is actually a suggest the market is paused. So which means that, let's say when market is up and then suddenly is slow down, that is meaning that the market is paused before it continue the uptrend. Yeah. So which means in here is saying that for a while, after which the ascending trend will continue and shorter term in duration and can be classified as a near term or intermediate pattern. Of course, in today's classification, I just mentioned about the continuation and the reversal. But there is another classification, which is the short-term pattern and also the longer-term pattern, or short-term or not a short-term pattern. So, but I still cover inside in this presentation later. We'll show you what is the short-term pattern, and it is very common in Bursa Malaysia. So now we talk about the continuation pattern. So a technical pattern that suggests a trend is exhibiting a temporary diversion in behavior and will eventually continue on its existing trend. Okay, continuation pattern occur mid-trend and are a pause in the price action of varying varying durations. Okay. A pattern is considered complete when the pattern has formed and then breakout of that pattern, potentially continuing on with the former trend. Continuation pattern can be seen on all time frames from a chart to daily or weekly chart. So this answers some of your question. Can I use this chart pattern in the daily chart? Can I use this on weekly chart? Can I use this on the tick chart, for example? So actually, this chart pattern happen in all time frames. So the first pattern we have to learn is the triangle. So there are three types of triangle: symmetrical, ascending, descending. All are these are the three triangle, and each type of triangle is slightly different in shape and has different forecasting implication. So by this, looking at this triangle, we can make a forecast. Where is the price that is going to hit, or as a target that is going to be? Okay. This is a symmetrical triangle, or it's a bullish symmetrical triangle. As you can see, this is the price move up. It's a trend. There's a trend here. You see the trend, and then it goes sideways. It goes sideways. Symmetrical. What does it mean symmetrical? Which means that a lower bottom, a higher bottom and a lower top. Yeah. So what we call is converging a straight line. The upper line descending and the lower line ascending. And the vertical line at the left measure the height of the pattern is called the base. So which means that this one is very useful later. I'll let you know what is the use of this, which means that the base, or what we call is the height of the base, or the pattern is called base. So this is a very useful later. Okay. Next one, symmetrical triangle. It's a continuation pattern. It represents a pause in the existing trend after which the original is resumed. If the trend has been down, then the symmetrical triangle would have a bearish implication. So as I said earlier, which means that the symmetrical is a continuation. Either it is a uptrend or it is a downtrend. The minimum requirement for a triangle is 4 reversal points. Remember that it always takes 2 points to draw a trend line. In order to draw 2 converging trend lines, each line must be touched at least twice. The point of intersection at the right where the 2 lines meet is called apex. For obvious reason, the symmetrical triangle is also called, they call it also coil. Okay, this is a triangle. The ascending triangle has a rising blower and a line with a flat horizontal upper line. Okay, this is a base. It's a base, and when this line meet, they call it apex. They call it apex. This is descending triangle. We can draw, for example, let's say you can draw this up to this level, and then it can meet. So when it reach this one at this point, we call it apex. Okay. Okay. The descending triangle, by contrast, has the upper line declining with a flat horizontal bottom line. So this is okay. What is the psychology of this? What is the psychology of this? Why this happened? What we call this the chart pattern exists, or why it happened? The reason it happened like this. Okay. The psychology is like this. And the price drop, you see, there's a buyer around this point, and then when you see there's a buyer around this level, so which means that it move up. But the seller or the buyer are not willing to take a higher level, a higher price. But the seller are willing to sell lower. But there's a very strong buyer here around this level, at the bottom here, very strong buyer. But after some time, the buyer that's diminished. So that's why one is broken, the price will drop further. Yeah, so it happens usually when there's a big buyer at the bottom. So that's why this rising triangle also always happen in Bursa Malaysia. Okay. So the limit or the triangle. Wait, I got to clear all this the annotation. Okay, all right. The limit for the triangle resolution. Okay, that's the limit for resolution of the pattern, and that is the point where 2 lines meet at the apex. Price breakout in the direction of the prior trend, somewhere between 2/3 to 3/4 of the horizontal width of the triangle. Yeah, so which means that it must break out 2/3 or 3/4 of the triangle. That's why it's very important of the apex. The distance from the vertical base on the left of the pattern to the apex are at the far right. See, for example, like this, see, that it must break out 2/3 or at least 3/4 before the apex. So it's valid. So for example, it's valid in this case. If this market is uptrend, and then the sideways is a triangle. This is the triangle, and then you can see that one is breakout. The price move up higher because the two line must meet at the same point. That time distance can be measured once the two converging lines are drawn. Okay, so this is where that we can forecast the price and also when the price will meet or when the price or the target will reach the target. An upside breakout is signaled by a penetration of the upper trend line. If price remain within the triangle beyond the 3/4 point, the triangle begin to lose its potency and usually means that prices will continue to drift out to the apex and beyond. So which means that if it failed to break out after the 3/4 or 2/3, 2/3 or or the 75%, and then the price will be usually we go sideways. The triangle provide an interesting combination of a price and time. So usually, you see, that's the advantage of a chart pattern because usually, especially the triangle, because usually we only have what we call the price action only, but we don't have the time. We only have the price, but we don't know the time. But using this using the triangle, they will forecast, or the forecast will tell you the estimate time and also the target. Okay. So the convergent trend line give the price boundaries of the pattern and indicate at what point the pattern has been completed and the trend resumed by the penetration of the upper trend line. This trend line also provide a time target by measuring the width of the pattern. Okay. If the width were 20 weeks long, then the breakout should take place sometime between 13th and the 15th week. How do we know? Remember just now that we mentioned the breakout must be the 2/3 or 4 or 3/4 of the triangle. You see, so we just draw the triangle up to the end, to the apex, and we calculate, and we just we calculate where is the 2/3 or the 3/4, and then we know where is the breakout is going to happen. Because the two lines must meet at the same point, that time distance can be measured once the two converging lines are drawn. Okay, an upside breakout is signaled by a penetration of the upper trend line. If price remain within the triangle beyond the 3/4 point, the triangle begin to lose its potency and usually mean that price will continue to drift out to the apex and beyond. Okay, the actual trend signal is given by a closing penetration of the trend line. Okay, sometimes a return move will occur back to the penetration trend line after the breakout. In an uptrend, that line has become a support line. Okay. In the downtrend, the line become a resistance line once it's broken. Okay. The apex also act as an important support of or resistance level after the breakout occur. Okay. This penetration criteria can be applied to the breakout. A minimum criteria would be closing price outside the trend line and not just an intraday penetration. Okay, now the volume should diminish as the price swing narrow within the triangle. So this is volume. Next one, this tendency of a volume to contract is full of all consolidation pattern. The volume should pick up noticeably at the penetration of the trend line that complete the pattern. Okay. The return move should be on the light volume with heavier activity again the trend resume. Okay, next one. Okay. Okay. Two other points should be mentioned about volume. Yeah. As is the case with reversal pattern, volume is more important on the upside than on the downside. Okay. And increasing in volume is essential to the resumption of an uptrend in all consolidation pattern. Okay. Trading activities diminished during formation of the pattern. So a close inspection of the volume usually give a clue as to whether the heavier volume is occurring during the up move or a down move. Okay. In an uptrend, there should be a slight tendency for volume to be heavier during the bounces and lighter on the price. Okay. So now measuring technique. Okay. Triangle have a measuring technique. There are a couple of techniques that are used. The simple technique is to measure the height of the vertical line at the widest part of the triangle and measure that distance from the breakout point. The second method is to draw a trend line from the top of the base parallel to the lower trend line. This upper trend line then become the upside target in an uptrend. All right. Okay. So whatever I said just now, you see, actually is just only can be summarized all in this one single pattern. The first one is the time frame, or what we say, or what we call is the time frame. Time frame, which means that how long this triangle. Let's say if this triangle is 20 weeks, so which means that the breakout will happen around 13 to 18 weeks. Okay, one. And the target price, is it the target price? The target is we measure the base here, measure the as you can see the red arrow here, see, and the target is which means that we call it X to X target. So which means once a breakout, so we know roughly what is the target. So the distance of this target between the highest and the lowest of the base is the where is the target once it's breakout. One. Second, when it will happen is that base and we draw a line. When we draw a line, this line, which means this line, this parallel line here, and we just draw from the top here, which means that this line, I draw this X line, and this line is the same line. So based on this, one is breakout, that the target will happen this. So on this point, so that based on that, you see, based on this triangle, see, the advantage is that we will know what price it will go and when it will touch that price. So this is the advantage of the triangle pattern. I think the most popular chart pattern practitioner, I believe is Dan Zanger. He loved to trade using chart pattern. Then he make from 10,000 USD to 18 million. 18 million, I think just about less than 2 years. So that is they use a lot of chart pattern. Okay, next one. Okay. So it's possible to arrive at the rough time target for price meet the upper channel line. All right. Okay. Okay. Price will sometimes hit the channel line at the same time when the two converging line meet the apex. This is the meaning. The price will meet when they start to converge. Okay. Next one is the ascending triangle. Okay. The ascending triangle and descending triangle are variation of the symmetrical but have a different forecasting implication. So the difference is that between the symmetrical and descending and ascending triangle is that the forecasting implication. Okay, this pattern indicate the buyer are more aggressive than the seller. Okay, if it's considered bullish pattern and is usually revolved with a breakout to the upside. No matter where is the trend structured, the ascending or descending triangle appear, they have a very definite forecasting implication. The ascending triangle is bullish and descending triangle is a bearish. Okay. The symmetrical triangle, by contrast, is inherently a neutral pattern. Okay, for example, like this. Yeah? Okay, this is an ascending triangle. A, B, and C. C is where is the breakout. So the base is where is the base, which means that we measure the base, and this is the target. And we call it here return move. When there's a return move, the line, the A and C line become the support line. So which is, for example, when there's a breakout at C, at the point of C, and it goes up and start to come down again. So it come the A and C line become the support line. See, so I believe it's easier for you to see the chart. I think it's easier for you to understand. And the target, as I said, this is X to X, which means that the distance between A and B, and then we just duplicate it and we calculate that is where the target will be. Okay. This, for example, like here, this is a base range. This is ascending triangle. Ascending triangle means it's higher low, and one is breakout. We can see that is and if you look at this, if you notice here, let me draw the line that it target, it hit somewhere here. So this is, as you can see there, it is almost near the apex. See? So which means that we will roughly can estimate or can make a forecast how high is it or how far it will go and when it will happen roughly. So that is the advantage of the triangle. Okay, let's see. Next one. Because the symmetrical triangle is a continuation pattern, the analyst must simply look to see the direction of the previous trend will continue. Okay, as stated, the ascending triangle is a bullish. The bullish breakout is signaled by a decisive closing above the flat upper trend line. The volume should see a noticeable increase on the breakout. A return move back to the support line is not unusual and should take place on light volume. Okay, let's see, we go back to this level, for example here. Okay. No, here, this one. In order for us to know whether the return move is, whether it is a return move or it is a downtrend, we look at the volume. One of the way we look at volume is that when the breakout, the volume must be big. And when the return move, the volume is small or diminishing, so that we know that it is a return move. If the volume is big, so which means that it is not a return move, which is a downtrend. So when it's downtrend, it will break the A and C. But usually, this kind of pattern is that it's a return move and then it will start to move up again because it's a continuation pattern. Okay. Next one. Measuring technique for ascending is relatively simple. Simply measure the height of the pattern and at this point and project the vertical distance from the breakout point that I showed you just now. This is just another example using the volatility of a price pattern to determine a minimum price objective. Remember, it is a minimum price objective. Okay. Another way of the ascending triangle is as a bottom. Well, ascending triangle most often appear in an uptrend and is considered a continuation pattern. It is sometimes appear as a bottoming pattern. It's not usual towards the end of the downtrend to see an ascending triangle develop. However, the pattern considered a bullish. Okay. The breaking of the upper line signal completion of the base and is considered a bullish signal. Both ascending and descending triangle are sometimes also referred to as a right angle triangles. The descending triangle is just a mirror image of the descending and considered as a bearish pattern. That's a descending triangle. This pattern indicates that sellers are more aggressive than buyer and is usually resolved on the downside. The downside signal is registered as a decisive close under the lower trend line, usually on increased volume. The return move sometimes occur, which should encounter resistance at the lower trend. Okay. The measuring technique is exactly the same as the ascending in the sense that the analyst must measure the height of the pattern. Okay. Measure is at the base to the left and then project that distance down from the breakout point. Okay. While the descending triangle is a continuation pattern and usually is found within the downtrend. So descending is within downtrend. It's not unusual on occasion for the descending triangle to be found at the market top. This type of pattern is not that difficult to recognize when it does appear in the top setting. In that case, a close below that flat lower line would signal a major trend reversal to the downside. Okay. This is a descending triangle. Usually it happens at the downtrend and it's come down and then it come down. The bottom here is a flat, but the top is a lower high. So this is why I call this a triangle. And it's still the same. How to interpret is still the same. So which means that the distance here is the target, and also it will break out between 3/4 or 75%. So this is if you look at the chart, the lower high. So the high is getting lower, and then is the bottom is equal low. This is a base range, and this is target. There's a target. You can see there is a return move, and then it's come down again. So this is apex, and this is a breakout point. So the next one is the volume pattern. The volume pattern in both ascending and descending triangle is very similar in that the volume diminish as the pattern work itself out and then increase on the breakup. As in the case of symmetrical triangle, during the formation, the chartist can detect subtle shift in the volume pattern coinciding with the swing in the price action. Okay, in the ascending pattern, the volume tends to be slightly heavier on bounce and lighter on dips. In descending formation, volume should be heavier on the downside and lighter during the bounces. Okay. The time factor in the strategy. Okay, now it's a time factor. Okay. One final factor to be considered on the subject of the triangle is that on the time dimension, the triangle is considered an intermediate pattern. It is because it usually takes longer than a month to form, but generally less than 3 months. A triangle that lasts less than a month is probably a different pattern, such as a pennant. So the triangle usually is a long-term pattern. So if it's less than a month, it's not a pattern. It's not the triangle. It's probably a pennant or it's a flag. The triangles sometimes appear on long-term price chart, but their basic meaning is always the same. Okay. Flag and pennant. So flag and pennant is a short-term pattern, and it is always happen in Bursa Malaysia. Okay. Bursa Malaysia, and they are usually traded together because they are very similar in appearance, tend to show up at about the same place in an existing trend, and have the same volume and measuring criteria. The flag and pennant represent brief pause in the dynamic market move. One of the requirements for both flag and pennant is that they must be preceded by a sharp and almost a straight line move. They represent situation where a steep advance or decline has gotten ahead of itself and where the market paused briefly to catch its breath before it running off again in the same direction. Okay. Flag and pennant are among the most reliable of continuation patterns and only rarely produce a trend reversal. The dramatic drop off in activities as the consolidation pattern form and then sudden burst of activity on the upside breakout. All right, this is what we call is flag. Okay, there are a few criteria in the flag. One is that it must have a pole, which means that in other words, it must have a trend before it moves, and then it move counter trend, which means that this is an uptrend. Okay, let's say here, if it is uptrend, okay, but the flag move is a counter trend. This is what we call a counter trend, which means that it's moving down. Okay, this is what we call a counter trend. And okay, I mentioned here this is a pole, which means there is a trend, and there's a pole, which means a pole means which means that there is a big move. Okay, and after that, counter trend and breakout. Breakout usually it come with a big volume, and usually if there's a volume, what happen here is that the volume is when this the volume usually what we call a diminishing volume, which means the volume is getting lower like this. The volume is getting lower during the formation of the flag, and once it's a breakout, there is a big move, there is a big volume, so this flag. So what is the implication? Oh, okay, wait, let's see. Oh no, okay, now next one. So how to use this flag? How to use this flag is the measurement, or the is measurement. So the measurement is from here to the base. Let's see. No, sorry. Okay. Annotate. Okay. It from here to the base. This is the measurement, and when it break out, this is the target, which means the same length. This one. This is also what we call is X to X target. So basically, it's just a very simple. This is what we call the flag, and it is a short-term pattern. Usually, it happen either is if in the minute charts, it will be happen in about a few minutes, or it's a daily chart. Usually, it happen about a few days. Sometimes it's just a few weeks, but usually it's less than a month. If it's more than a month, and then it is not a flag or pennant anymore. It will become a triangle. Okay. So the next one is a triangle. Sorry, not triangle. This pennant. Actually, the pennant and the flag is almost the same. The only difference is that how does it look like? How does it look like? For example, you can see this is a pennant, but it's still the same. It's still the same. In what sense is that it's a counter trend, which means that the price prior to this is what we call continuation. When it's continuation, there must be a trend. So this is uptrend, and then it's counter trend, which means it's come down, and then this is a breakout. And the breakout, remember, you must have a big volume. Okay. Usually, when this pennant happen, also the same thing, which means that the volume usually is diminished. So this is how to interpret the flag and pennant. So this is example. Another example, for example, in this case, this bull flag, this bull pennant. Okay, flag and pennant can happen both way, which means that it can be downside, it can be upside. But usually the downside and upside. So which means that in other words, if the market goes up and happen this flag formation, so it shows that there is a pause in the what we call it the trend before it continue. Just the meaning of flag and pennant. So it's roughly is very short, which completed within 2 to 3 weeks. Pennant and flag in downtrend tend to take a long event, less time to develop, and often last no longer than 1 or 2 weeks. Okay, it means this way. Usually, the uptrend is a bit longer compared to downtrend. Downtrend usually the flag and pennant is always shorter. Sometimes it's only 1 or 2 days or 1 or 2 weeks. So usually in Malaysia, usually 1 or 2 days only. After that, it will continue the trend. Okay, the breaking of the low trend line will signal the resumption of the downtrend. Okay, the breaking those trend lines should be placed on the heavier volume. Yes, okay, that's mentioned earlier. All right, okay, then the both pattern is short term, and then Measuring. Okay, the measuring implications are similar for both pattern. Flag and pattern are said to be fly at half mast from the flagpole. As I mentioned, just flagpole is a prior sharp advance of the decline. The term flag half mast suggests that this minor continuation pattern tend to appear at about halfway point of the move. So that's why, as I mentioned earlier, that it is how to make measurement. For example, like when the price goes up and then there's a flag and the price goes up here, goes up again. So which means that the length or the distance between this let me I change the color, red color. No, yeah, okay, this one, the red color here. See, will be the same. The height will be the same here. This is the height of this. When it's broken, this is broken. Come with a big volume. All right, there's a meaning. Okay, next one. All right. Yes, okay. This is hydro pole, the flagpole. We call it flagpole, and then there's a price target. There's a breakout. Breakout must have a, remember, this is volume. This is in the bullish market, and this is in a bearish market. This is the flagpole and the price target. Heavy volume here. There'll be a heavy volume here, and also remember that the volume is diminishing inside the flag. When the flag formation, usually there's a small volume. Okay, next one. This is you look at the chart, it will be like this. Market is this is what we call the pole. From here, this move up, and then there is a sideways, and then it is move up. This is breakout, and there is where is a target. Measuring implication. To be more precise, measure the distance of the preceding move from the original breakout point, the point at which the original trend signal was given, either by the penetration of a support or resistance level or an important trend line. Okay. The vertical distance of the preceding move is then measured from the breakout point of the flag or pennant. Okay. The point at which the upper line is broken in an uptrend or the lower line in the downtrend. Okay. So the summary of the flag and pennant. They are both preceded by the almost straight line move on heavy volume. Price then pause for about 1 to 3 weeks on very light volume. The trend resume on the burst of trading activities. Both patterns occur at about the midpoint of the market move. The pennant resemble a small horizontal symmetrical triangle. Okay. The flag resembles a small parallelogram that slopes against the prevailing trend. Both patterns take less time to develop in the downtrend. Both patterns are very common in the financial market. Yes, it's very common also in the Bursa Malaysia. Okay. So next one is wedge, the wedge formation. The wedge formation is similar to symmetrical triangle, both in the term of its shape and the amount of time it takes to form. Okay, like symmetrical is identified by two convergent trend lines that come together at the apex. Okay, I need to bit more faster. Let me see. Okay, this is much easier. Okay, this is much easier. Okay, this is a bullish falling wedge. Okay, so what's the difference between this wedge and the flag? The main difference of this wedge or flag or pennant is that this is a longer time, which means that it takes longer time to develop. So there is the difference between the wedge and the flag and the pennant. So this is a wedge formation. Okay. This is bullish, which means the bullish means it's a continuation. As you know, it's almost similar. The difference between flag and pennant compared to wedge is that how long does it develop? There's a difference. The implication or how to calculate the target is almost the same. So which means that you target here, this is a target from here to here, the target here, and then when this breakout is also the same target, almost similar. Okay. See, next one, this is bullish, this is a bearish. Okay. So next one, okay, roulette flag, like a flag like I mentioned already. Okay, and then which is as a top and bottom reversal pattern. Okay, let me see. All right. Let me explain again. Okay. Let's see. Okay, this is how to differentiate between the which can be continuation, can be reversal. Okay, how to differentiate between is a reversal or it is a continuation. Okay, if it is a continuation, that the wage formation is counter trend, so it is a continuation. If it's still follow the trend, so it will be the reversal. For example, like this is the yes. You notice this? The trend is down and the wage, the formation of wage also follow the trend. So this is a reversal. One is break this level or 2/3 of it, and then there's a reversal. So there's a difference. Same thing also when we call it's a falling wage. This is called rising wage. It's the same implication. So which means that is uptrend. When there is a rising wage, so which means that it is a reversal pattern. Rectangle. Okay, rectangle is so very common, especially this kind of market, this kind of time in the Bursa Malaysia. Okay, let's see. All right. So this is easier for me to explain to you if you look at the chart. Right. So if you look at the chart, this is what we call rectangle, bullish rectangle. So which means that the market move sideways. If you look at the Bursa Malaysia, also you can see that the move sideways, but moves at the top, and now it's below the rectangle formation. So this is a bullish rectangle. And as usual, also usually there is how to know or how we look out, what are we going to look at, or what are we going to waiting for. Usually we are waiting for the breakout here. Then this is there should be a big volume. Should be a big volume here. At the breakout this point, the volume should be a big volume. So ladies and gentlemen, even though this is what we call in this session is we're talking about what we call chart pattern, but actually it's still the same. Same means what? It is all about support and resistance. Here is a resistance here, but a breakout with the volume. But when we look at the channel, so at least we know that okay, this is a channel, and we just wait for it to break out with volume. So it's confirm, or it is give a signal whereby that the market is going to continue to go up. So this is remember that this is uptrend and this is a downtrend. This is downtrend. So usually the channel is a continuation pattern. Okay. So let me have to make it faster a little bit. Okay, trading range intact, swing and traded, or status produce for sideways. Okay. Let me the measured move. Okay. Okay, the measured move. Okay, this is a measured move. The measured move, for example, like usually flag, pennant, all we use almost the same. Or wages also is almost the same. For example, in here, how to measure? The measure is that from A to B, and it come down, or it's come down and it goes up. Usually, it is market is if a sideways, then we can use this kind of measurement. This is what we call a measured move. So the conclusion: the three pieces of raw material used in technologies are price, volume, and open interest. And please focus on the price. A closer look at the volume or open interest. Open interest, if you in the commodity, in the commodity there's open interest. In the equity there's no open interest. And how they are incorporated into an analytical process. Okay, what does it mean? It means that this way. The first one we have to look, or we have to consider, or we have to focus is the price. The volume is the secondary. There's to confirm the price action. Okay, next one, reversal pattern. Okay, so let me go straight to the chart. There are so many reversal pattern. Actually, there are a lot. One of the reversal is key reversal. Head and shoulders, rounding top, ascending and descending triangle, rectangle, double and triple top, diamond, rising and falling wedge, V formation. So all of these are the reversal pattern. Yeah. I'm not going to cover all, but most of it. Okay, let's see. The first thing is key reversal, because this is very common. Okay, this is a key reversal. So how to measure the key reversal? Is that the price goes up, which means they're creating a higher low and a higher high, and it the next candle that it creating a lower low and lower high and lower low. This is what we call a key reversal. That this is a key reversal. Key reversal top. Okay. Next one. Okay. The key reversal bottom is that when the price that make a higher, this is what we call the key reversal. Is creating a higher low and a higher high. So this is what we call a key reversal. Okay. Next one. Okay. Pick a volume action. Okay. Reversal normally I call it by the unusually high volume. Frequency occurrence more frequent after buying and selling climax, and they can develop in and of themselves or as a part of a larger chart pattern. Technical significance, a key reversal has only a short-term significance. So usually it's only for the short term. Okay. Key reversal are more potent if one or more of the following occurs. The period high period high penetrates the previous period high for a key reversal top, or the period low significantly for a key reversal bottom. Okay. The reversal period was preceded by a long unbroken trend, so which means that the very long uptrend, and then there is a key reversal, so it's a very potent. The period closing price was below one or more immediately prior period ranges. So these are very important. The period volume was particularly high. Okay, let's see. So typical price action. So the head and shoulder. Okay, now head and shoulder. Let's say three element: left shoulder, head, middle, right shoulder. Let me go to the where is it? Yes, all right, this one. So this is head and shoulder. It's very common. It's very powerful, and it is I think about 80%. 80% always reversal. Okay, there's a left shoulder, a head, and a right shoulder, and this is a return move, and this is a breakout, and this is a neckline. This is a neckline. When the price move up, you see, they form the left shoulder, and it's creating a higher high. Is higher than left shoulder, and it come down, and it make a right shoulder. Usually the right shoulder is lower than left shoulder, and it break the neckline, and it come down, and one is it a return move and come down. Usually it is always the price always come down or reversal. The next one is how to measure the price objective or the target, which means that you measure from here to here, and this is what we call also X to X. It is when it's broken here, is break this level, and the price should be somewhere here. So that is how to interpret what we call the head and shoulder. So every time I have to change it. This okay. Next one. Okay. This is a head and shoulder, but it's what we call it inverse head and shoulder. It always at the bottom, but usually it's always happen at the top. But it sometimes it do happen at the bottom, but we call it inverse head and shoulder. How to interpret? So it's the same. Usually at the breakout, the volume is very big volume, and the price objective also the same. So which means that we measure from the head to the neckline, and once it break out, then it's the same distance from the head to the neckline. Yeah, this for example, as you can see, left shoulder, right shoulder. Usually right shoulder is lower than the left shoulder. It is the head, and this is the neckline. You can see draw the line. One is broken. You see the volume is big. There's a big volume here, and usually the left shoulder volume is higher than the right shoulder volume. And when there is a return move, the moving up, and there's a return move. One is the return move. It failed to break the neckline, the price will drop further. The price objective, this is from the head to the neckline, and we just measure, we take that's the same length, is from the neckline to the bottom. So this is how to measure, or how to use this what we call head and shoulder. Okay. This head and shoulder, or inverse head and shoulder, it's almost the same, but it's just a reverse of the head and shoulder. The left shoulder, right shoulder, and usually when there is a breakout, this is always a big volume. It's big volume here. You can say it's big volume. So that is to show that is a head and shoulder. But the most important is the neckline. So it must break the neckline. So the volume is heavy on the rally portion of the left shoulder. Okay. Volume decline on the dip from the left shoulder peak, and then again it's heavy on the rally up to the top of the head. Okay. A reduction in volume occurs on the decline from the top to the head. And this ensuring a rally to the right shoulder occur less volume than the previous rally in this direction. Okay, let's see, I make it faster a little bit because all of this is the explanation that I already explained already. All right, okay, the field pattern. Okay, sometimes there is a field pattern of the head and shoulder. Once price move to the neckline, complete the high and low, high head and shoulder pattern, price should not recross the neckline again. So which means that if cross the neckline, so which means that we call it, there's a fail head and shoulder. Next one is double top, triple top, and bottom. So basically it's more the same. Triple top, double top. Okay, this what we call double top. Quite similar, quite similar compared to head and shoulder, compared to head and shoulder, but the top is almost the same. But the most important is the neckline and the breakout. Okay, this for example, first breakout, there is the neckline is somewhere here. Don't draw that line here. It should be a neckline here, and once it's broken, then the price will drop further. The how to calculate or the objective, trading objective is also the same, which means that we take from the highest to this level, and then one is broken, is next one will be goes to it's the same. So it's also called X to X. Okay, let's see. So this is double bottom. Double bottom is quite common in Bursa Malaysia. It's the same thing, which means that is they must break the neckline, and usually the volume is heavy in the breakout. It's big volume in the breakout. So triple bottom is okay. This is the double bottom. You can see this double bottom, and the breakout is at this level. The volume will be heavy. This is resistance, or you call it as a neckline. Okay, so I just skip this. This triple bottom, triple top. Triple top also is very similar to the double top, triple top. How you measure or how you interpret is the same. This is the same. If, for example, like this is a triple top, and they must have a what we call a neckline. One is split the neckline, and usually it comes with a big volume. There. Okay, the bottom. Okay, let me skip this so that I can give some example. All right. Okay. So this rising wedge, I covered just now. The rising wedge. Remember just now what you are just covered just now. Rising wedge is a reversal. You see, falling wedge. It will follow. It depend. If the trend. Okay, just remember this. It's very simple. Just remember this. If the trend is down, and then the rising wedge is counter trend, so this is a bullish. Okay. If the trend is up, see the trend is up, okay, and there's a counter trend is coming down, so it is a bullish. So wait, the other way around. Sorry. Just now it's a Sorry, just now is a bearish. Sorry, bearish. Because this rising wedge is a continuation pattern. Okay. If a falling and for rising and falling wedge, it is a okay. Just now I showed you just now. Okay, I don't repeat again. Okay. Another formation, there is a V top. There is a V top. Also very common in Bursa Malaysia. The V top. This is how the explanation about the V top. Okay. The most important is that volume is heavy throughout the pattern. So which means that it move up and move down also is heavy volume. Because your occurrence, that's a very common. It come down. Okay, usually the volume is big. Whether it's bottom or it's top, usually its volume is big. On the way up is on the way down also is the same. It's all volume is big. V top and V bottom. This for example, okay, this is a V top. It's a V top. Volume usually is big all the way, which means that it goes up to the spike, and also it's come down also is also big volume. So this is another one. You can see that it's big volume. There's a big volume. Yeah. Same thing also whether it is we call it spike top or V top or V bottom, it's the same. Okay. So this is all right. Now, so okay, just time. Okay, thank you very much. Okay, now open for the question. Shane can open for the question so that at least they can understand, because I just talking, maybe they don't understand.
All right, thank you so much, Tuan, for sharing with us how do we trade using chart patterns. I think today we have learned a lot of forms and also chart patterns. So now is now time for us to ask questions so we can think how we can put things into application. All right. The first question is, what is the most common chart patterns always found on Bursa Malaysia?
The most common chart pattern. Okay. Actually, there there's a lot of chart pattern. You see, there's a lot of chart pattern. But not all that is always happen in Bursa Malaysia. Okay. Let me stop sharing first. Let me stop sharing. Okay. Not all that happen in Bursa Malaysia. Usually there is what is the pattern that is here? Triangle is very common, but the most common you always see is the flag and pennant in the short term. Always see that pattern. Almost every day you can see the pennant and flag. And a triangle, yes. Triangle. Parallel also, yes. The head and shoulder, yes, also. Let me see whether I can see the head shoulder or not. KLCI, no, IBM KLCI. Let me search for it. Is there any head and shoulder pattern here? Okay. Because something you cannot see in the daily. All right, let me share. Share. Okay. For example, okay, this is actually there's a lot of chart pattern here. Actually, there's a lot of chart pattern here. Okay. But I just want to show you just only one. That is the channel. See, there's a channel here. You can see there's a channel here, and then you just even though the price is hit this lower line or the lower channel, but it's not broken yet. So we are just waiting for the how whether it's broken. So how to measure how to measure whether how far it will go? That we just take the base of this channel to this level, and then this is the distance. There's a target. This is how to use a target. But of course, if we use this target for the KLCI or the index, it's not very accurate. But if we use it for the shares, usually is quite good. Sometimes it hit the target.
All right, thank you so much, Tuan. The next question is, what are the most common reversal patterns on Bursa? That's by Faizul.
Most common. The first thing is that
reversal.
Reversal.
Yeah, most common reversal
V top.
pattern.
Very common. You can see also there's a lot of V-top here.
V-top lah.
Yes, there's a V-top here. As you can see, there is a V-top here. For example, there, here, this, there. See, there's a V-top. V-top and V-bottom, that's one. They're very common. Head and shoulder, also very common. Head and shoulder. Iron cover here, a rounding top, also is very common. Sometimes it's quite rare, but they do have is a you know, if we look at for example like this Dan Zanger, the most pattern that he loved very much is the cup and handle. But in Bursa Malaysia is a bit rare. It's quite difficult. There is a cup and handle, but it's a bit rare. And also when there's a cup and handle in Malaysia also, it's not like US stock. Usually when US stock, when there's a cup and handle, the cup and handle is you know, the pattern is like this. When it start, or at least or like this, and then it come down and it start to make cup like this handle. So one is broken, usually the price will shoot up very high. So in Malaysia is not really rare lah, but less frequency it happen compared to the triangle, compared to other things. But usually the flag and pennant is always happen. A lot happen. Flag and pennant.
Okay. The cup and handles is always formed at a big time frame, right?
Yes, correct.
Okay. Then which chart pattern always have the high reliability to follow through? Like it will have a high reliability to form the pattern.
Good question. The most reliable actually is the head and shoulder.
Head and shoulder.
Yes, head and shoulder. Usually the head shoulder usually is always a reversal. Very what we call is very powerful pattern is a head and shoulder. It's very, very powerful.
So once it break the neckline, we have to leave already.
That's right. But you see the problem of this chart pattern is what we learn actually is not the same. It means that it's not really, it's not perfect. So we have to practice. For example, like in here, you can see there is a double top here. Even it's double top, but it's not the same. It is higher than this, you see. You see, for example, here, this is higher than this, but this also is the double top. And because the most important in double top is the neckline. This is where the neckline. This is most important. It goes up, it come down, and it create a double top and the neckline. What is broken neckline? That we know that it's going down. Straight is going down. In fact, if you study closely all of this, actually there's a lot of chart pattern here.
I also see a double top next to the double. Yeah.
There's a lot. But you need to, the chart pattern that you need to look it slowly, and you have to practice your eyes to see the chart pattern. This is Bursa Malaysia FBM KSCI. Today it dropped below 1,500 psychological level.
So where is the next support? Is it 1482?
The immediate support is 1482. That's right.
Wow, today the candle is very bearish. Huh?
Yes. It's how many days? 1, 2, 3, 4, 5, 6, 7 days. 7 days.
Okay.
But in terms of weekly, is how many weeks? 1, 2, 3, 4, 5, 6 weeks already. Already 6 weeks drop.
Okay.
But still within the channel. You can see, if you notice, it's still within the channel. It's within the channel, which is around this level. It is 1482 up to 1,600. So still within the channel.
All right. Thanks, Tuan. The next question is by SK. Would you like to know which time frame is best to use chart pattern? Is it weekly, daily?
Okay. Chart pattern actually exists in all time frame, whether it's daily or weekly or minute chart. It exists in all time frame. But flag and pennant is only for the short term, or for the short term. Flag and pennant is short term. Others is it can be a long term. Usually the like triangle or that is longer term.
So in the daily time frame, if you find any flag and pennants, so they are actually not flag pennants, is it?
Not the time frame is the daily. Yes, it's a flag. It's a flag and pennant. It happen usually very short term. If intraday or usually 1 hour, 2 hours, or 1 day or even weekly, but not on monthly. You
All right. So
cannot use
even
it
in
monthly.
a small time frame, say a minute chart, right?
Yes.
We can also apply the same technique, the forecasting technique for price target and stop loss using head and shoulders, inverted head and shoulder, double top, double bottom. Am I
Yes.
right?
But like for example, like head and shoulders usually is more accurate for a longer term compared to the short term. But
Mm,
flag and pennant are very good for the short term.
mm. Okay.
Is
So
there
if
any
you
flag
are,
and pennant here? No?
yeah, if you are a scalper, then have to always find the flag and pennants formation.
Yes. For example, so you see when you have what we call is when we learn about chart pattern, chart pattern, that we need to master the chart pattern, see? And then we have to look at the chart pattern where is whether it is not look like flag, something is not look like flag, but you must remember what is the why, what kind of formation is it. You remember, you know that the flag is a pause in the uptrend. Okay. For example, this in here, this is what I call a pause in uptrend here. It's not look like flag at all, but that is the criteria of the flag. Pause in uptrend. If it's uptrend, the pause uptrend, you can see there is a flag here, a pole, there's a pole here, and it's a pause here. It's just a 1 day, but that is, you see, it's not a right flag, but actually this is what we call the flag formation. That's why you have to know you have to learn about when you learn about the chart pattern. You see, you need to know, okay, this formation, what is the criteria? See, the candlestick or the, let's say for example like the triangle, what is the formation? How does it is performed? And then from there only you see that when you notice in the trend or in the making, so you realize, okay, this is the pause in the trend.
Mm. Okay, thank you so much, Tuan. The next question is, can you explain about high tide flag?
High tide flag.
Yeah, that's five rules.
I don't know. I know what's
Okay.
even about high tide flag.
Yeah. Okay.
High tide
Um.
flag is, what is it?
Okay. Maybe Fairuz can explain for a bit. So in intraday trading, which time frame give ample time for pattern formation? That is by Ahmad Zohari.
Okay, good question. It depends on the whether the share or the price is active or not. Which means that if your trade is active, you can see the pattern even in half an hour. Let's say okay, let's say we look at LGMS. All right, this is very new, just a few days ago. Okay, let's say we go on the 30 minutes. No, we go on 10 minutes. Can see or not? If you be on 10 minutes, when the price move up, the 5 minutes. Let's see. Can we see now? Can we? Okay. Okay, now bar chart you can see. Okay, there's a candlestick. Usually, if you are short-term traders, this is what you're looking for lah. This is what you're looking at, which means that the price is moving up. Remember, this is this is 5-minute chart. This is a 5-minute chart. When the price start to rise, you see, and it creating a, let me show if you can see, this is easier for you to see on the line. Okay, now this is okay, this is one line. No, it's too big, make it smaller. Okay, one line. Okay, and then this is second line. Okay, this is what you want to see is that the price move like a staircase. It move up sideways, it move up sideways, it move up sideways, it move up sideways. Okay. So it move like a staircase. This is what you want to see. It didn't come down at all. Let's say it come down, but still higher than previous one. It come down, still higher than previous one. It come down, it's downside, still higher than the previous one. See, except for this, but then still, if you draw a line, it's still above there. I don't know whether you understand or not, but that is what is the pattern that you want to see.
Okay. So shall we go to the next question?
Yes.
All right. Are you able to show some flag and pennants and also triangles in the charts? So that's by Rohana.
Yes, I'm searching for it. I can find it.
Or maybe you can use another stocks as an example. May not need to be
What stock?
LGMS.
What stock? Because you need to have what stock that is moved up very fast recently. Let's say the Top Glove or not. No, Top Glove when they move up. Top Glove.
Okay, CK suggested Petron. Tuan, you're mute. You're on mute.
Sorry. Okay.
So haven't heard you for a while.
Okay, let's see. Got any? They got only one here. Okay, this one here. Let's see. Here got one here. This is the downside flag. This one, and then where else? This is a pattern. No, this is no good. This is not much. You can alamak lari dah. Where is it just now? There. This one. Because the chart pattern is not it's not easy. It's not easy for us to to explain, because we need to. The first thing that the chart pattern you have to do is that the first thing is that you must remember what is the criteria, and then only you look at the chart pattern or look at the chart, and then you have to have some imagination to determine what is the pattern. Let's see what pattern is this. No. This one have a 2 bar. No. Okay, it's 2. No, it's not the patron. No, let's say I can set top
My
glove.
EG maybe. Oh, my top glove. Go ahead.
Top glove. I think top glove have during the when the price move up very high. All right. This is okay. This one. Let me see. This when it come down. Okay, this one. Okay, and then let's see what's no. All right, this is come down. You can see. Okay, this is another one. You can see that this one. This is how does it look like? This is this one. A pause in the pattern. Some more. This is but this is so not very good. Not very good here. It's somewhere here, somewhere here. There is no, it's not good. Let's say we take only one. We take only one here. Okay. Because make it bigger. Make it bigger, bigger, bigger. Okay, make it bigger. Okay. So when we talk about flag and pennant, we talk about flag and pennant. That no wonder lah. This is only 1 hour. Alamak. So best also. Okay, never mind. Look at 1 hour. All right. This is 1 hour. Okay, this is short term. Okay, this is very good short term. 1 hour. Okay, this 1 hour. Okay. Yeah. Remember, when you talk about a short term, we talk about flag. It just mean that it is a very what we call the pause in a trend. Pause in the trend. So in this case, you can see here. You see, the trend is down, up, down, 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 and suddenly it move up. See, it move up, which means that it is a pause in the trend. It didn't fall down, which means it's sideways, or it is counter trend. Of course, if the best, if a good, if we say it's a good flag, usually it be like this. It drop and then it move up and then it drop like this. See, but this one also you can see right there here, for example, it drop here and then it goes up and then it drop. You see, you notice it?
Yep.
Yeah. So of course, if you just you don't practice, it's very hard for you to see. You need to practice. Only that you can see. You need to practice. But what is most important is that you know that the flag and pennant is a pause in the trend. So in this case, the trend is going down, see, and then it starts to go sideways, or it is on this counter trend, and it comes down again. There.
Okay.
If let's say now I change it into let me clear this one, let me change it into line. There you can see clearly the price drop and then it counter trend and it drop further. This is what we call a flag and pennant. Flag and pennant is the same. The only difference is the how it looks like only, but it's still the same. The same means that which means it's a pause in the trend.
So it indicates a trend continuation pattern.
That's right. Flag and pennant is a continuation pattern.
All right. Next question is by Faisal. Is it true that we have to wait to execute buying or selling stocks until the chart pattern is formed?
It depends. It depends on what kind of pattern, But the most important actually is the support and resistance. Let's say, for example, like triangle. Okay, when the triangle. Okay, let me draw the triangle. Let's say, for example, like triangle. Okay, for example, like this a triangle. The triangle here. Okay, and then like this. Okay. Okay. So with the triangle, this is the resistance and this is the support. Okay. If prior to this, the price is moving up, okay, and this kind of triangle happen, so that we know it is a continuation, and usually will break this level somewhere here. It start to break out is somewhere here, okay, which means that this is either is 2/3 or 75%, yeah, 2/3 or 75%. This level and it should be broken, so that the most important is this line, this top line actually is as a resistance. One is break the resistance, so that is where that you enter.
Mm.
You need to do a lot of practicing, you see. What I can recommend is that you can go to the Bulkowski website. It has a lot of exercise. You can do the exercise. They show you the chart and you try to draw the chart pattern and then they give you the answer. Actually, it's a lot. You can try. This what we call one of the master chart pattern is Mr. Bulkowski.
Okay, thank you so much, Tuan. Let's do one last question by Mohammad Amir. Is it true that some people say that US market chart patterns are more predictable and tend to follow the chart patterns compared to Bursa Malaysia?
I would say yes, but the main reason is because of the US as more stock than Malaysia and more active compared to Malaysia, so that there's a lot of chart pattern that really happen or is much easier compared to Malaysia. Because, for example, at the moment, for the time being, at this kind of time, the Malaysian stock is going down or sideways. Basically, it's just sideways because still within the channel. Compared to US, whereby the fluctuation is very, very high, which means that the range is very big compared to Malaysia. So that's why there's a lot of chart pattern, or you always can see chart pattern in US stocks compared to Malaysia. Because in Malaysia, sometimes it's a bit difficult or a bit not easy for you to search for the pattern compared to US. But both do have patterns. Not necessarily that there is no pattern, but then they do have pattern. But in US, I think it's much easier, mainly because there's a lot of stocks there. In Malaysia, we have only about 900 stocks compared to US, a few thousand stocks, you see.
All right. Thank you so much, Tuan, for sharing your perspective into this statement. So let me just go ahead and share my screen. So thank you so much, Tuan Haziq Zainal, for sharing with us trading using chart pattern.